Right. So the second part of this chapter, chapter four, is very much talking about or trying to focus on the conditions for accepting an engagement. And you will see that as we go through it, that ultimately there's sort of two sides to this. Yes, you would agree. There is what's going on with the client and what's going on within our organization. And I guess it's like any contract. Before you accept a contract, you have to sort of think about whether or not this is a good fit for you as an organization. So let's sort of begin. And so we're going to start with the sort of we're going to start with the client before we come back to ourselves. And so typically, the question really is, this is a mixture of the two, but they are the same principles. We're just renewing it. When I say renewing, continuing is maintaining, and this has to be done every year with the engagement. But the same sort of safeguards and things we need to watch. So typically, how accountants, I'm sure you've never really heard. I don't. I think it's impossible for you. I don't think you've ever heard, although I have heard lawyers advertise on the radio, legal firms advertising to be able to provide certain services in a range of things, family, immigration, whatever. But you never hear accounting firms advertising. It's not really our professional, so to speak. So how do audit firms find work? So really, direct client requests. So you have a client who will come along and maybe by word of mouth, and they'll see you on the high street, or they'll open the directory and or Google or whatever. And when I say advertising, what I mean is that sort of vocal advertising. But you can advertise, of course, in magazines and in trade magazines and things like that, and tendering. So again, like I say, with direct client request, you have the client literally approach the firm as a result of a recommendation, which is typically the case. And we have advertised in some sort of trade magazine. And sometimes you have it, the tendering is the reverse, where you have the client asking, putting a bid out there, and then we would then go in there and then put a bid in as to how much we think we can do the job for. And typically this must be based, of course, on experience. This is very normal with bidding. It's almost like a bit of an auction. So before we consider accepting the engagement, there are a number of things. I mean, this is a knowledge question. You could just get this. So typically what you get in the exam is you might have a starter question for about 4 marks or 5 marks, or it might be the end, 4 or 5 marks, just little things like that. What are the issues to consider before accepting an engagement? And again, I guess you can almost sort of deduce what's going on here. This question of professional clearance, right? And clearance literally means, can we go ahead? We need to speak to the people that you dealt with in the past to know whether or not it is safe enough to work with you. Preconditions for an audit. These are more technical issues, and we'll see that as we come along, whether or not you can actually carry out an audit. Remember, I highlighted the fact that an audit was a very specific engagement with specific conditions. There had to be a financial reporting framework in place for us to even call it an audit. So if there was no framework to work with, there are no benchmarks. So in effect, you can't quite call that an audit. Um, at least that has to be a starting point. But we'll see. There's a few other things, like the organization having good internal controls in place. Because when we come to talk about risk, we will see that we cannot fundamentally carry out or audit absolutely every document. So there must be controls in place that we must be able to rely on. To rely on. And of course, the reputation of the client. So these are all things that we need to think about. So what is professional clearance? Professional clearance is when we get in touch with the with the outgoing auditors. And so I've written here, technically in the exam, refuse the engagement if the client refuses you to get in touch with the client. And so our aim ultimately is to try and reach the outgoing auditor, asking for all the information relevant to the decision, whether or not to accept the appointment, if you like, just to sort of understand what was going on really, fundamentally. And again, hopefully you should get a response. I mean, we are professionals, and assess if there are any ethical or professional reasons why we should not accept the appointment, and then make a decision. At least we have it. We have the information there, and then we can now go ahead and make if you like, a decision. So again, like I've highlighted here, existing auditors should ask client for permission. Of course, you should ask for permission and communicate to incoming auditors um, if the client refuses. So this is really a two-way thing. You should have existing auditors trying to kind of make sure they get in touch with the if you like, with the new new auditors, to let them know what's going on. Ignore this. um oh yes, actually, I think I know why I wanted you to go there. So let's just look at the preconditions. Let me just come out of this and look at the although I might see it again. Let me just check that. Or will I see it again? Let me just come back to that. Oh yes, I will come back and see it. So that's okay. That's fine. I don't need to go to that. So some of the other conditions before I come back to the um, um, preconditions, I'll just come back here. So um, again, some of the things we want to look at regarding the client is a question of independence and objectivity. If you like, how independent are we going to be able to be? If you like, what are the threats involved here? Everything we just talked about earlier on. How objective can we be? What are the relationships in place? Are there any sort of close third party relationships? Is this a business we have strong relationships with? Can we be able to do the audit and not be biased about the results? With management integrity, if you feel as a firm that an association with this management might be detrimental to your reputation as an audit practice or an audit firm, it's something you might want to think of not doing. And of course, fees. I mean, there's no, you're about to carry out an engagement, a contract. So, depending on whether or not they came to you via um, recommendations, or they saw your advert, or it's been a tender, you want to make sure that the fees will compensate for all the time and effort you're going to spend on this job. Then now we can look internally. Internally is looking at the resources. Do you have the professional competence and do you care to be able to exact this contract or to execute this contract? That's really the question here. Do you have the time and the capacity as an organization to do this? And um, typically we'll come back to looking at controls, but depending on the organization, how, I mean, do they have good controls? Do they have, what is the nature of the business? Is this something you're willing to can you manage to be able to say the accounts? Can you manage to give an opinion um, on this on this business, given the sort of risks that are involved here? When we talk about risks, maybe the inherent risks and control risks that we'll come back and talk about. Inherent risks just being the very nature of the business, control risks, whether or not they have good controls in place, or good people who can actually get the job done. Um, will you be doing? How's this going to work? And of course, again, like I said, this question of well, money laundering. If there's a case of money laundering, you want to also probably not do this because this is a threat, so to speak. Professional competence, of course. Are you able to actually do this? Do you have the capacity to do so? So I then earlier on talked about this question of preconditions. Um, so this question of preconditions, sometimes you get questions literally just asking about the preconditions, like 3 marker, 4 marker. Um, and you should only accept an audit engagement if the preconditions for an audit are in place. So what does that mean by preconditions? First of all, we're talking about the framework. What international financial reporting standard are we using? International financial reporting standards. We need some standards because all the accounts, this is reporting, so every figure there is based on a standard, right? Everything from revenue recognition to how we recognize inventory, to um, what we do with disclosures, and how we recognize non-current assets and the policies in place. So there must be a framework. There must be a framework. Management must be very clear as to their responsibilities, that they will provide us with all the relevant information that we need. um, and that sort of thing. So this very awareness, this strong awareness of, if you like, of responsibility is critical. Again, like I've highlighted here, preparing things in accordance with the applicable financial reporting framework, and giving us all the information that we need to be able to carry out our work. So these are the sorts of things that we want to make sure we have put in place. We also want to be happy with the internal controls. Internal controls don't always have to be technological. The question here is having all the right authorizations, um, having systems in place by which they do things that we have to be able to document. Remember, I mentioned an audit being a test of controls and a test of detail. So there needs to be internal controls necessary for the preparation of the financial statements. If we're to be able to do this, carry out our risk-based approach to audit, as we cannot technically look at everything in the business. Okay, great. And those are kind of the issues there with the as part of the preconditions. So this you must be comfortable with understanding the pre-clearance, the professional clearance that must take place. You must be happy with these preconditions. I talked earlier on about the fees, the risks. Do you have the resources? So it's really a balance of, are we happy with the client? Do we have the resources to actually do the work? Right. So engagement letters are central. So I was going to say here, engagement letters, really like any contract, you must be very clear on the terms of the agreement, on the scope of the agreement, on the subject matter, what it is you're going to be looking at, on the fees, on the, if you like, on this relationship. When will it start? When will it end? So it's to make sure we minimize misunderstanding, any risk of misunderstanding between the auditor and the client. What type of report are we going to give? What methods are we going to use? Whose responsibilities are given? So let's just go through them very quickly. So we send a letter before the audit commences, and typically it's reviewed every year so that everyone's very clear on what the terms of the agreement are. And yes, it confirms acceptance. We set out the terms and conditions of the engagement. What are those? So you can see here clearly we must be very clear about the responsibilities of management. We will talk about what framework we intend on using to actually carry out this work, what type of report we will be issuing, and the type of language we will be using, and what type of assurance we intend on looking for. Remember, you'd have an engagement letter with any type of it, assurance engagement, so that if you're doing a cash flow, so that someone's not thinking you're doing it similar to an audit. So you'd be giving negative assurance there, but here you're giving positive assurance, giving a positive opinion. Um, and again, here, really, whether or not we would be having experts come in. There's this big issue about limitations to the auditor liability. So if they're not happy, how much they can sue us up till. Um, the role of internal auditors, if you like, agreement of managers to provide draft financial statements in time to allow the audit to be completed by the deadline. That seems rational. We need the accounts to actually do the work. Um, the basis on which the fees are calculated. So we will. It's very clear, so no one starts saying, "I didn't know how much it would cost." Um, and typically, management must notify. So typically, after the audit report is signed, you do have events happening afterwards that might have a bearing on the actual accounts that we just didn't have enough information for at the time. So management must let us know what's happening. Um, Typically, again, like I said, sometimes we don't have information about certain things, so we'll come to discuss this idea of written representation. So, I mean, it's not exactly, when we come to talk about evidence, it's not the best evidence we can get, if you like. It's almost like third level evidence, but it's like saying we don't have any information, we can't find it. Um, Management will have to provide some kind of written guarantee that that is the case and that it is on their heads and they are responsible for it. Although we should be looking for better evidence of a balance as opposed to depending on the word of management. Engagement letters. So you can see you can get asked in an exam to list 5 or 6 things that you expect to see in an engagement letter. You can see we've talked about quite a few. But it's very clear that we also want to highlight what the standards are that we're going to be using, um, or what, yeah, well, professional standards, regulation, and legislation applicable to the audit, any limitations, what type of approach we're going to be taking, if you like. And this should really have been at the beginning. What are we actually covering? Like I said, the objectives and the scope of the audit. What are we looking at? The financial statements, the income statement, the statement of financial position, the statement of cash flow, the disclosures, the notes. Very clear um, to the to the users what it is we intend on doing, and also what our responsibilities are, if you like, to towards the client, and how we intend to carry out our work. So great. So that's kind of the situation there with accepting work and the things we need to think about. There is a TYU that you please should um, look at and work on, and so to give you and it's on page 89, so please look at that and do that as well. This is a written exam. The more you're doing more writing, the better you are, um, if you like, with when you get comfortable with the ideas here, apart from just listening to them. Cool, great stuff.